Afternoon and welcome to this month's monthly class. We'll first inquire about your not only yours but your family and friends health. Probably you are all good and you are all keeping safe and doing good. How about all of you? All good?
Yes, I'm good, sir. I'm good.
Fantastic, brilliant, very good, all good, excellent. Yeah, we are going through a difficult time, but having said that, that is one side of our life. We are having some experiencing some changes in our life, like distance and social distance and the scarcity of essential products and materials and necessities. But at the same time, because we at the other hand we are traders and we are getting possibly good volatility in the market for last 2 months, and that volatility is our friend as a trader. So before going into that details, we will go through the I welcome you all, and we go through the general financial product advice warning first. NP Financials Pty Limited, NP Financials or NPF advises all service recipients of the following. This information is provided only on general financial product advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. No information received from NP Financials shall be considered as a financial trading recommendation. I'll allow that 20 seconds for you to go through the rest of it.
Sir, I'm not able to see the screen, yeah?
Okay. What about now?
Yeah, good, good, very
Fantastic.
good.
Please go through the general financial product advice warning, and after that we will start. Good that we have now gone through it. What we will start is we will start with our I'll take all your questions, but before we start with our questions, what we have been doing for so long probably is starting from I think it was in December. I think yeah. Now I think December or November. Just to this is our instruction based discussions, as you know. Sorry, not instruction based discussions. My apologies. This is our asset class evaluations, and under asset class evaluations we have Forex, commodities, bonds, indices and shares. And this is if I click on the indices section and go to a little bit down, maybe before this all this begins, as we always say, and that market knows everything. If market can actually know about tsunami much before, if market knows much before the Kobe earthquake, which 1995 tsunami in 2000 I think 11, and why not this COVID-19 or the crisis related to it. So we don't know all these things, but from the very beginning we are printing from as you know, from 2007 to 2009, specifically from 2007 October to 2009 March, so that was 16 months. Market came down and we gave a name to it, financial crisis, GFC. And then from 2009 market participants have to wait for 11 years, 10 years 11 years to see a change in the trend. So that is getting captured from October 2nd, when we said German 30 DAX has printed back to back candlestick reversal patterns, as you can see, this one, and we were starting from that day, from 2nd of October we started to be bearish on this all this market. And then immediately after that post on 2nd, in within 2 days DAX came 391 pips down, and after that again we printed on 30th of December, after 1 month in between November. So in 30th of December we said there was a head and shoulder pattern here on the DAX, and they are all correlated, like the DAX, ASX, Australian Stock Exchange Index 200, ASX 200, and then Dow Jones, the index of 30 biggest companies in America, and then the S&P 500, 500 midterm to big companies in USA. They're all related, like everyone is related in foreign exchange. I think Selvan has joined. Hi Selvan, how are you? Trust you are going well. Okay, we have just started and we are starting with the Selvan says all good, very good, excellent. So yeah, as you know, this is the section in which you have to write down. Uh, Okay, so on 30th of December we said DAX has printed a head and shoulder pattern, and from this level of 13,500 we are having a weakness in the market, and we said the same thing in 1 minute chart in ASX, and then again on the 28th of January we said there was a humongous engulfing here. Why this is a humongous engulfing? Because those of you who are welcome, I forgot to welcome our new member in the team today. This is his first class, Sukhdeep Singh. His name is Sukhdeep Singh. Sukhdeep, you can say hello to all. All right, so on behalf of Sukhdeep.
Hi everybody.
Yes, Sukhdeep says hi everybody. Fantastic. Hi Sukhdeep, how are you? He is our latest new student, and on 28th of Selvan says hi. 28th of January we said this is a humongous engulfing, because the body of this red candle has engulfed three or four of the previous. Remember, this is weekly candles, and this is Hang Seng at 78.6 Fibonacci. We have drawn from this swing high to this swing low. So we said on 28th that there is again weakness in the market. And the last thing we said on the same day, I think 28th, again we said ASX in 4 hours is having a head and shoulder. So all of them, whether it is Hang Seng, Hong Kong, or it is German DAX 30, or Australia ASX 200, they are all very much correlated. All happen simultaneously, maybe a little bit here and there. And this was our last post on 24th or 23rd night, or 24th morning, that there was a tremendous weakness in the market, and we said the eye is missing here. Is it the time for corrective move down? So after 10 years of up movement in the market, on 24th of February we said this is the possibly the time for the market to at least get started with a corrective movement. We were not knowing about the COVID and all those things, so that was on if I have to go here, okay, let me bring this fellow so that will be better. So this can go here. I'll bring a plain and simple chart, which is a daily chart, and I'll do the maximize price so that you can see only the price. And we'll go to DAX on 24th of February. So on 24th of February we wrote on 24th of February DAX, let it come, 24th of February, yeah. So this was our date of writing, 24th, 21st. We generally write on the Saturday, Sunday, so we wrote in Sunday, which is 23rd, and this is Monday. So we said this is a corrective measures can start on the DAX. So that was on this date. I think that was a weekly chart, is it? So let's see. Sri says welcome Sukhdeep. Okay, good. And then we'll go to our yeah. So that was a day. No, that was a daily chart, and in the daily chart we saw this evening star. This is this Harami, this evening star, and this again this evening star, back to back evening star. So if I convert this into candlestick, so that will be, I can show that. Yeah. So this was, we'll go bar by bar. How market actually tells us before this, actually how market told us and always tells us how what it is printing and what is the possibility. On 13th February there was a Harami there, and on 18th February at an all-time high, all-time high level, you can see the monthly chart. This is an all-time high at this level. Yeah, 13,601 all-time high. It crossed the all-time high. Actually the all-time high was January 2018, 13601, and on this date we are talking, this is a monthly chart, February. So breaking down to the February and going to the particular date when we posted, we saw this Harami, we saw this engulfing, sorry, evening star, and then we saw this big one, which is a big engulfing on Friday, which has engulfed 1 2 3 4 5 6 7 candles. So on here we posted that there is a possible weakness in the German stock, and there is a possibility of a corrective move, because that time we were not knowing that market is going to plunge. But at least if we enter here and we have developed the skill set of hanging on to the trade, then we can be beneficial. Yeah, so we entered on that day, on when the low is taken out of this engulfing at 13,498, and COVID was not declared that time, or China was hiding, and market knew everything. And whatever it is, I don't want to go to the controversy, and we saw what happened in the market. Yeah, from one post we posted here, and market came down very heavily, and rest is history now. So they say a miss is a miss. So why a miss is a miss, that means from here to here market actually came down 41%. Yep, 41%, 5,527 the DAX, and ASX also came down. Let us see ASX how much it has come around that point. So ASX has come from that date, from this market. ASX has come 39, so about 40%. So, and then if we go to Dow Jones, yeah, and this is Dow Jones, and Dow Jones also from the all-time high it has come down 38.47, so around 40%. So all of this index, as you can see, has come down very heavily from that day, from that particular day, from 24th. We were not knowing there is a 40% correction going to happen, but we saw something, we write something, and most of the things what we write, almost very high percentage of the time, it actually comes true. So immediately DAX came and all hit our all targets, and so is the, and balance and rest was history. Who has taken this, participated in this market? Those of you who are trained by us in index, any one of you got an opportunity to do trading in this market, because this is a big volatility market. What are your thoughts on this before we can move on? You can
So
write,
just
you can talk. Yeah,
a question.
yeah, go.
When I'm trading, let's say Aussie dollar forex,
Hmm.
is it necessary to look for DAX or ASX 200?
So the Your question, Sri has asked a question. Sri is asking when he is trading ASX, sorry, Australian dollar, AUD, USD, and when he is trading AUD, USD, his question is, should he see the ASX 200? That means what he is asking is, he is asking mm, correlation between ASX 200 and Aussie dollar. I'll respond to this later on, and I want to get,
Okay.
yeah, and I'll need to go through others also. So, any other comments? Just type in. You can type in here. You can type in here, yeah, or you can talk. Who could see the correction coming this way? Who could see COVID? It is an unfortunate question, but COVID coming our way, or any disaster, or any correction, or anything happening. Who could see from the market before 25th, as we did?
Excuse me, Partha.
Yeah.
Just quick question. I was just reading some um, like newspapers that there was nothing like COVID-19 at that stage, but there was some commentary going on that most of rich people like Warren Buffett and others, they are trying to accumulate some cash reserve. They did not know what is happening, but they knew one thing, that something is coming as a big correction in international market, like something happened in 2008 or 7. It could be something even bigger than that. And recently some people are making such comments that COVID-19 is like one reason, but eventually the market was already weak because the fundamentals were weak and there was so much debt and many companies could not recover. The only thing was the timing is looking like a bit earlier, or just coincident that COVID-19 went through and everything came up. But the statement he was writing, that when he saw that someone is like looking for good stocks like Apple, he invested in, but then the things changed and it was looking like something is going to happen because of the inherent stats were showing the debt levels were like not bearable for most of the corporate world. COVID-19 is still looking like, especially the people who invest in gold, that is just a reason to put on COVID-19, even though it's a big um, reason today's world, but still the overall financial system was still weak after 2008.
Fantastic. Thank you for that. So that was Sukhdeep Singh speaking. So anyone wants to ask any question to him, or wants to have any observation, or agree, disagree? Because this is a interactive session. The more you talk, the more I learn. Thank you, Sukhdeep. That was a good one. I'll wait for 30 seconds and then jump into some of the things which I saw, unless and until you are speaking or writing. Marty says technicals before fundamentals. Yeah, absolutely correct. I 100% agree with Marty. Technicals before fundamentals. Yeah, absolutely. Sukhdeep talked about fundamentals. Marty says technicals about before fundamentals. Lisa says no one could foresee COVID-19 or any other event. I think as a technical trader, we can only trade as usual and follow technical signs. Absolutely correct. Very well, very good, excellent. So this is Lisa says no one could foresee COVID-19 or anything, any other event. I think as a technical trader, we can only trade as usual and follow technical signs. Yeah, fantastic, very good, Marty, excellent, Lisa. Who else? Who else want to interact? Selvan says Lisa is bang on, absolutely correct. Anyone else? Monkey Man, others? Uh, If not, then what we'll see how to actually do what Lisha, Selvan, and Marty are saying. One way to do many of you, actually all of you actually know our principles of it can break one, it cannot break two, and then if it is breaking two, then either through a break of a trend line or through an exhaustion gap, and so on and so forth. So before this 21st of February, we already saw a gap here, which could have been an exhaustion gap, but and nothing happened here. But that gap actually stayed there. That gap, once it is this happened, price prints closes above this gap. I'm talking about this gap. So, and then there is a possibility, that there is a crack and snapback can happen. So once this gap was there in front of us, let us make it red. Yeah, so that was already there, and that gap can act actually as a support and resistance on 21st. One thing, as I was talking to Marty today morning, and I'll talk about Marty more, and he'll also talk. So on one thing which I, as a person, as a technical trader, as all of us do, is actually we all know that simple principle of U, D, P, T, and P star, T star. That is our fundamental thing. And if I bring the same chart here on writing P's and T's, like swing high, swing low, swing high and swing low. I don't write. I prefer peaks. Just write P and T. They may not be necessarily peaks. Like this one is not a peak, but a swing high. This one is a peak. So I have replaced somewhat loosely the peaks with a swing high and a drop with a swing low. So our job as a technical trader is to join these last two swing lows. So when we are here, we will join these two as a top to top or swing low to swing low, and then when this printed, we join this as a top to top to see whether when it is breaking. So we last at before this date, 21st of February, as a technical trader, we must do this, and I prefer to change the color to red, uh, if you allow me to do so. Yeah, so because if it why red, and why it is a confirmed trend line, because in between these two drops we have two peaks, and the highest peak we'll take, and that peak was taken by this. So there was a close above and high taken out. Yeah, close above and high taken out. So this principle will never get changed. Close above, this close was above this peak, and then the high of this bar which just closed above this peak was taken out. So everything happened on this date. Everything happened as if it was going to go up. But we have our knowledge of technical analysis, and we join this drop to drop to see whether this is sustaining or this is a bubble which is waiting to get burst. So what we did, we joined drop to drop, and then we saw the next day we had a peak, all-time high, and CNBC, Bloomberg, and every other newspaper or news agency actually saying that market is going to go to 10,000, 20,000, and whatnot. So we saw, but as a technical trader, we saw that this trend line is broken. If you're an aggressive trader, you would enter at the low of this taken out. You don't know how much market will go, whether it is going to go 1000 pips or 1 pip or 100 pip or 0 pip and reverse. None of us know. So this is one way to do this. Other way is to not other way, but the same way can be extended. You join this, and then you join this. So you are what you are trying to do, you are trying to map the market. So you join this. So if you want to map the market by joining all the drops, it will look like this. But to start with, I would not prefer this, but you can do this as a mapping concept. But I prefer to do the last two drops. So you can also start doing this. Join the last two drops to see it has closed below. Now it has closed below, and if this low is taken out, then possibly the gap will also be broken. So this gap which was there, will also be broken. Let's see what happened. So we'll be entering at around this point 7048, and there was an exhaustion gap, there was a breakout gap. These gaps are extremely important. So this gap happened to be an exhaustion gap, but there is a crack and snap back because it market went up and then came down. And invariably what will happen, this type of gaps will happen when it has to break something. So for example, as I showed you, that gap actually broke all the trend lines it broke. That means this gap is saying that this is a breakout gap and market is possibly going to go down. So let's see. So we are in the trade because we placed the trade here. Maybe there is maybe a little bit of slippage. So let's see, the low was 7066 minus 20 pips. We will enter this is a daily chart, as you can see, 24 hours. Yeah. So 7066 minus 20 is 7046. We placed an order to go short at 7046 with a stop loss of 7046. We enter here and with a stop loss of 155 pips at the high of the swing high or the peak. So the high of this bar was 7048. So there was no slippage because our order was at 7046 and market went up to 7048. So there was zero slippage. We are filled in at 7046. And up to this point is clear. Any question on the gap, on the pending order, on the slippage, on the trend line, anything? You can talk, you can write. While talking, just unmute yourself and talk, and then again mute yourself, otherwise I can hear echo. So we have talked a lot till now. We have talked about gaps, we have talked about trend lines, we have talked about confirmed trend lines, we have talked about close above, high taken out, and we have talked about crack and snap back. Yeah. So this was crack, closed above. I'd prefer this line. So I'll, even if you are joining this peak to peak, we have a wedge. We have a wedge here, which was a crack and snap back. The wedge was broke, and again from the technical analysis, that's why technical analysis is so strong in an uptrend. In an uptrend, if we see this kind of wedge, when the P's are going up, that means that's a rising flag, not a falling one, but a rising flag. In an uptrend, a rising wedge is a reversal. So if you remember that, then we will go and see this. Sri is saying when to see respective charts in ASX, Dow Jones. Yeah, I'll reply to that. Otherwise, if you have not asked me anything, so possibly I'll understand that you have understood everything. Yeah. So there was a crack and snap back because it closed above this falling peaks and immediately snap back and broke the top line. So if you enter there, wow, my goodness. So you'll be very happy here because we have entered here 7046. Now we are at 7046 to 53.6%, and we take unrest is history. Yeah. So when this is happening, this is a daily chart. Remember, this is a daily chart. When this is happening, we'll go slow. When this is happening, don't do much analysis. For example, if we do a pivot point analysis here, so when we do pivot point analysis, mid, why mid? I don't know mid. Mid we don't need. Mid we don't need. There was a poet in me. Alright. So midpoints we don't need, so we take that out. We keep the chart clear. Okay. So it just broke the pivot one, and don't do much analysis here and close the trade here. That is my point here. So what we have done, we have just thrown a we want to keep the clean. chart clean. So we have just thrown a pivot point here, and one more thing which we can throw it possibly our favorite 200 moving average, not many but the standard ones. For example, if you write moving, it will come here, moving average. So make it exponential and 200. And the last thing probably what you look to have is Bollinger, just the standard ones. I'm not talking about anything big here, just the yeah. So don't yeah, that was my purpose. When you see this, remember the entire body, if the entire body goes against the Bollinger and then reverses, it will be a condition of oversold, according to possibly in our trend detector also it will be collected. And then don't get overexcited and close the trade here, because this is only the starting point, because only because it has closed below, it does not declare itself as a oversold condition. So as we remember from our instruction based discussion, that this is tagging the Bollinger Band is not a problem. So it tags and it close above below the 200 moving average for the first time. This is 200 moving average in green and red, and this is Bollinger in tile color. So it went down. See, the open and close is below the Bollinger Band but not reversed. The open and close below the Bollinger Band but not reversed, not reverse, not reverse, not reverse. Yeah, so up till this point, when it is reversing from the Bollinger, close below, open and close below, and then close above. So this is a case of crack and snapback on the Bollinger, or on the extended S2. Now nothing happened on X1 because it just cracked through, and H2 it closed below and close above. On a Bollinger it closed below Bollinger and close above Bollinger. So what I am discussing here is, if we are short from here with a stop loss of 153 pips, we can think of closing the trade here with 541 pips. So that's almost a 3.5% trade. Yeah. If the high is taken out. So let's see what happens. Everyone understood this, tagging the Bollinger and closing below and closing above? Yes, no? Yeah, Sri says yes. Fantastic, very good. Yeah, if this is more than this by, yeah, Bankim says yes, very good, by 30 pips, because of this volatility. What happens here? Why I'm saying 30 here? Why I'm saying 20 here? There is a understanding here. That understanding is known as average true range. Yeah, so average true range will increase. So if I write here average true range, this fellow will come here. And if we make this as possibly maybe 14 period, generally people the book says 14, you may keep 14, so make it histogram. Yeah, so it's already there. So this one here, so I'll delete as you can see, this average true range 14 here, this one here, average true range 14. But that means 14 period. What is average true range? Nothing but the 14 bar high minus low, that's a range. So 14 bar high minus low divided by 14. So till this point the average true range was 65 and 61 and 69, highest was 74 till this date, which is before the COVID 21st. The highest was 73, the average true range. That means average of 14 bars high minus low. So the next, when we go to our point of thinking to get out, but while getting in here we said 20 pips, because the average true range was 66. So either you can do 6.6 multiplied by 3, or you can do just 10 and 20. So we just, because this is a gap, we were not knowing about this gap, of course, but this is a daily chart, you may say 10 or 20. So but at the time of getting out, see how the average true range has got increased from 65. Next bar it went up to 78, next bar it went up to 88, next bar it went up to 93, next one 106, next one exponential 118, and next one 123. So in 5-6 bars, daily bars, it went up from 66 to double itself at 123. So if this is the case, when this bar presents itself, it was 134. So let's take 15, take the 2 digits, round it, so 15 multiplied by 3, 45. So if the next bar is going beyond this 45 pips, we will be getting out, not the 10 pips or 20 pips, but 45 pips, because of the exponential growth of the average true range. Yeah, so let's see this, how much it went up from here to here. 15 pips. So it went only 15 pips, so we survived this, because we are getting out at 45 pips, but it went up to 15 pips only, and then we survived. We get more, we get more, we get more, and again this is a crack and snap back here, because it closed below the Bollinger Band and then closed above the Bollinger Band. So there is a crack and snap back on the Bollinger Band. So the average true range here at this point is gone up to 209. So make it 20 multiplied by 3, 60. So if this fellow goes up 60 pips up to this point, next bar, then we'll be getting out around 6095. Let's see. We survived. Why I'm highlighting this bar by bar? Because my only point here is to hang on to your trade here, don't panic. Hang on to your trade here, don't panic. If you don't panic there, you will get 1100 pips there extra, and here you'll get 1200 pips there, just by hanging on to the trade. You did nothing, you just took high plus 45, high plus 60, that is coming from this average true range, and you survived, and you have entered here, remember, and instead of getting out at 541 pips at 3%, market has given you 2026 pips, which is, we have taken a risk of 155, so that's a 15% trade in front of you. Any question here? Sri says, what is the calculation of 45 pips? 45 pips we did here, because that is a good question. Okay, so 45 pips we did here, high plus 45, not 10 or 20, because here it is fine. At this point, when we are entering here, the average true range was 65, or you can do 6 multiplied by 3, 6.5 multiplied by 3, that is around 19.5, and 20. So that's why we placed 7066, the low of that bar, minus 20 pips. Generally we do 2-3 times of average true range, depending on whether you are a very aggressive trader, or a moderate trader, or a risk aversive trader. So if you are a very aggressive trader, you will possibly take 7066 minus 6.5. You just take the ATR minus divided by 10, 6.5. So you will enter at 7061. But if you're a moderate trader, you will multiply ATR by 2. For example, 6.5, don't make it 65, 6.5 multiplied by 2, that is 13, and you will enter 7066 minus 13 at 7053. Or if you are a risk aversive trader, you don't want fake out in the breakout, because this is a breakout of this trend line, breakout of the trend line. So what you are risk aversive, so what you will do, you multiply the 1/10 of the ATR that is 6.5 multiplied by 3, that is 19.5. We'll enter this minus 20. That's why we entered here at 46. Yeah, if you have understood that, then while getting out also we follow the same rule. So we are in the trade, we are laughing, dancing, and not throwing things. And on this date, we thought, oh, this is a definite technical crack and snapback. And then the ATR here is 1/10 is 13. Make it round it, 15 multiplied by 345. So 6507 plus 45 will get out at 6553. Is it clear? Is it clear, Sri? 45 pips where we are coming from? Marty says clear. Sri, 45 pips, because that was the question you asked. Sri says clear. Okay. Sri is saying ATR is a tool used in ASX 200 or indices trading system. ATR is a tool which can be used in any instrument, especially if the market is extremely volatile like this one. Market was never volatile like this one, in at least in my lifetime I have not seen. For example, if I don't know why this chart of mine, even after paying subscription, I do not go beyond 2016. But so today morning I saw my friends Marty Stewart's chart going beyond. See, my chart is not going to the left beyond 2016. I don't know why. I am paying the subscription though. But your chart may be going, if you make this 100,000, your chart may go up to 1972. So if you see the fall of the GFC from October 2007 to March 2009, so that was 16 months, 16 months, and market fall 50%. 50%, 50% in 16 months. If your chart is going, to 2006 7, yes, no? How many of you are charts going, monthly charts going up to 2006? Sri says no, I say no. How many are lucky? Those of us whose chart is not going up beyond 2016 to the left hand side, we can write a help desk. Marty says 2002, so he is lucky. 2002 for ASX. So Marty, can you see the chart in 2007 October to 2009? How much was the percentage for ASX? Around 6,800, I think it was high, and low was around 3,000. I think, I don't remember, 500. So what is the percentage, Marty? In 2008, high 6,000. Yeah, high, Marty says high is 6,850. Yeah, that was roughly remembered as 6,800. And 2009 low was 3,100. Okay, so if you draw this scale from 6,850 to 3,100, how much is this scale showing? How much percentage scale, this scale here? Or we can do a calculation. Marty, how much percentage? So we can do 6850 minus 6850 minus 3100, 54.72. Marty says 50. Thank you, Marty. In 16 months, market came down 54.72%. So that was a normal fall. ATR will not climb like this one. But here, what we saw in last 2 months, that's a crazy. In 2 months, market came down from, in 2 months, 40%. So previous experience of GFC showed us that market fell 55% in 16 months, but in these 2 months it fall 40%. So this is why, to answer Sri Utagi's question, when the market is abrupt, when this fall is not normal, when the market is abrupt, any instrument, it can be any instrument, I'll go to a forex pair and show the same thing. When the market is abrupt and falling in an abrupt or a drastic way, we take advantage of ATR, because we know in that case ATR will multiply itself exponentially. So from 66 it went up to 134 to give us 45, and we survived here 45, and then we survived here also, and then we are running a profit of here this much here. Yeah, is it clear? From this point we entered, up to this point we are running a profit of 1475, and we have taken 155 pips risk, that is a 10% trade there. Yeah, everyone clear about this? Any questions so far? Clear. Very good. So this example, why I am showing this and highlighting, is only to give you a strength in mind, because fear is real. So you must not be fearful here and close the trade. This is just one example. This example comes every day in and out, and don't be fearful and close your trade, and you do a meaningful technical analysis, and allow your trades to run. And with this note, I'll come back to my questioning session again. I would request Marty Stewart, who joined us 7 months before, and Marty would tell his story a little bit more in a better way. And I was told he was trading before coming to NP Financials, maybe more than possibly 8, 9, 10 years, and after coming to our NP Financials and going through our understanding of technical analysis, he could manage to double his account. And our question to him is, how did he do that? What are his learnings from our analysis? And then what can he contribute to the group, to the fellow technical analysis team members, so that all of us can be benefited. Marty, please, over to you.
Hello, Partha. Thanks for that. I think
Sorry,
the biggest.
sorry, Marty. Just ask a question. Everyone can hear Marty? Please write yes. Yeah, Marty, please. Everyone can hear you. Yeah.
Okay. I think the biggest takeaway that you've helped me out with is I'm using a trading journal.
Yep.
So it's not so much making the money, it's finding out where we're losing it and finding out how we can limit our cost of business. My trading journal showed me that I had unfavorable days, so I stopped trading on those days. It showed me that my stops were too tight, and I've learnt that I'm pretty risk adverse. I like wider stops, and just by doing those couple of things, I've stopped losing so much money and actually made money.
Go.
Probably found through paper trading before I started trading with real money that I took each class step by step. I started with candlesticks and realized they weren't very productive on their own. We need to add everything else into them. Fibonacci, support, resistance, and all the rest. So we have to combine everything that you teach us to make a quality sort of trade entry. By what I mean, some days were not so good. I found on Mondays any trades that I entered weren't really the best trades. They got stopped out a lot more frequently. Every other day seemed to be more productive for myself. I read the book Partha suggested, Reminiscence of our Stock Operator, and in that old book, it did have a few takeaways. Like as before, we saw the happenings of the COVID crisis. The book tells us that whenever there's movement in a market, there's excitement, and the media has to rush to find a reason as to why the market has moved. Just little things like that. Through the trading journal, though, I found my biggest area I need to improve on is actually hanging on to a trade. I haven't really found my way through that process yet. And I think that's about it.
Fantastic. Thank you so much, Marty. And I'll repeat what Marty says. But before that, Lisa is asking a question to Marty. What do you mean by some days were not so good? You mean you previously didn't stop when trades were not going your way, Marty?
Yes. On Mondays, I found trades didn't perform for me as well as most other days. So it was such a small account, I just got rid of trading those days altogether. And it brought my cost of business right down.
Thank you, Marty. Any other question to Marty? Lisa says, Partha, do you think there is anything that happens on Mondays that could cause that? Yeah, I'll reply that question. Be a good question, Lisa. Marty said Monday. Yeah, I'll show you very interesting things around that. We'll pause this. We'll park this question and come back to any other questions to Marty. You can write. You can talk. While talking, unmute yourself, and you know where to write. Take this opportunity, mate, because Marty Stewart is like one of us, one of you, one of me, who could do that. So if he can do in 7 months, you can also do. Learn as much as possible from a person who has done it. Selvan says Monday ITUS means what? Selvan, ITUS means what? Marty says Monday ITUS. ITUS means what, Marty? Or Selvan? Those of you, both of you. Monday disease.
Mondayitis, yeah.
Is it a disease? I don't know. What is Mondayitis? What is this disease? Lisa knows about all of these diseases.
Partha, it's like sinusitis.
Sinusitis. I learned a new English term. Itis. You pronounce it as what? Itis? 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 What?
Itis. Yeah, there's quite a few diseases with itis in the end.
Ah, yes. Sinusitis. My God.
Meningitis.
Meningitis. Oh, really.
Partha, while I'm here,
Yeah.
I think we all need a thing called emotional maturity. When, as Marty mentioned, he couldn't hang on to a trade. I learned this a little while ago as well myself. We need a thing called emotional maturity, not to allow the trade to affect our emotions. What happens is when we see the money, we think, oh, I better get out now in case this thing turns around. And this happens to me quite often. We better turn around. But what we got to do is have a system in place, like you're saying. We need to look at the ATR and have a stop loss. If it's going to reverse, it's going to reverse. And to put that stop loss in, and stick to it. Not to think, oh, it's coming up to my stop loss and let me move the stop loss and let me do this and that, etc., etc., etc. That's what I'm talking about, emotional maturity. And I hope this helps everybody else.
Brilliant, very well said, fantastic. Thank you so very much for the initiative, Selvan. I really appreciate. What to add on to what Marty says, Selvan also added something on the emotional maturity. So everyone understood what Selvan says, what Marty says. Do you have any other question? Lisa says yes, that emotional control can only come with experience and practice. 100% correct. 100% correct. And Selvan says, I think we all need a thing called emotional maturity. Absolutely correct. Those of you who are starting with NP Financials recently, very well, Bunkim, for example, Marty, only 7 months, and Bunkim 6 months, and Sukhdeep 2 months, and one other fellow who will join again in maybe 1 month. Yeah, so those of you who are starting new can be benefited from this traders who are having some experience of putting years together. Thank you, Selvan. Thank you, Marty. Any other question to Marty and Selvan? Lisa says it means people can't function the first day after the weekend. So what will happen to the people when they will go to the office after 6 months? After this, no question. She says, prior to NP Financials, how many year of trading experience? Marty, this is a question to you. Marty says 12, and he's honest. Any other question to Marty? Sri, I thought he wrote in English. Do you want him to write in Mandarin? What do you want? Any other question to Marty? Or yes, no, just write yes, no, then we'll move on. Marty says on and off, but very consistent last 7 months. Very good, excellent. Sukhdeep says, should we avoid a common discussion group? Means what? This 2 hours of every month we talk. This is an interactive group, and yeah, if you are meeting within meeting, yes, I agree, but that I control. I allow only one-to-one meeting, not many to one or one to many. Should we have a common discussion group like WhatsApp? I say no. Sri says this is important discussion, and Selvan says good idea. We can have a WhatsApp group. Yeah, if the group is group wants and share their email ID, please please write to support@npfinancials.com.au, and then we can have a NP Financials WhatsApp group, and those of you who are willing to who contribute and communicate and discuss, because the people here at NP Financials are extremely hardcore traders, as you are seeing, because we do bar by bar analysis. Unless and until you are quite a professional, you cannot do bar by bar analysis. And then Sukhdeep says WhatsApp is great. Alright, so I'll wait for all of your individual consent to put into support@nvfinancials.com.au. If I'm getting all of your consents to start a Selvan says count me in. Sri says I agree. Okay, so that's fine. This chat is recorded. That's fine. Sukhdeep says I am fine, but we want a professional because we are abide by AFSL and ASIC. Bankim says I am fine. So from regulatory point of view, those of you who are writing I am fine, I agree, count me in, please say, and I copy and paste the same thing in your email to support@npfinancials.com.au, so that we can start a group and get it I can moderate, Marty can moderate, and if any volunteer wants to moderate, can be a moderator, and we can move on. Okay, fantastic, very good. So I'll wait for your email confirmation. All right, thanks Marty, thanks Selvan, and thanks Sukhdeep for the wonderful idea. All right, so what Marty says, I'll just repeat whatever I remember. I hope you have written down what he says. I actually did. I try to wrote everything what he said. He talked about, correct me Marty if I'm wrong, he said about how the journal which we shared with all of you, the special NP Financials journal, how it has helped him to understand the inner beauties or the brutality of each and every Sylvan says my email has been sent. Okay, thanks Sylvan. The inner characteristic or statistics of journal. So he talked about Monday, and this is the journal which we share with every one of you upon your request to support at npfinancials.com.au. And if we see this journal, these are the instrument, this is the instrument column, euro, dax, and so on and so forth, and gold and oil and whatnot. So cryptocurrencies, yeah, everything. So that from A11, A11, when this journal is shared with you for first 7 days, you will say, oh my goodness, what is this? Of course this will be shared in a blank format, and what you have to write down is just a few things. Balance, every other thing will be automatically calculated. For example, just to put an exam case in hand, for example, we were going short on euro USD. What we'll write, just to demonstrate, we'll write euro USD, and the entire 6 digits, 6 letters are important. And then for Google, if you are using a Google worksheet like the one in front of you, then they are American, so they follow first month. So you write 4 means April, 4 divided by, put a slash, I say divided by, or 4 slash 6. 4 slash 6 is the 6th of the 4th in Australia, that is the 6th of April. So just press enter, 4 divided by 6, enter, and then it will be look like this. And then supposing you are entering on a criteria, for example, on a sample setup, you write SS. And then supposing you are going on a daily time format, you write deal daily. And then you go, whether you are going a counter trend or trend, for example you are shorting the market, then you write trend, because generally speaking euro nowadays is below 200, and if it is below 200 we say trend short, and we'll write short. And then we'll write, for example, for euro we'll write we are going short on 10809. So we'll write where we are going short, and then we'll put a stop loss, for example of our technical analysis we'll put a 11148. These are the only things which you need to put. So what we are putting the instrument, the date, and the time frame in which entering, and whether you are going trend or counter trend, then where is our stop loss and where is our entry point. These are the only things we are putting, and it is telling us if you have $10,000 in front of you, this is tailor made for you. If you have $10,000, the $100 is 1%, $100 is 1%, then it will give you a size of 0.02. So in MT4 you will have to type in 0.02 as your size, and in this trade you are risking $100, and if you make this $100 $1,000, it will be all $1,000. And it is saying 4 means in the 4th month it has got collected from the formula. All these are formulas. See this, if G284 is blank, so on and so forth, month, and then the day of the 6th of the 4th is Monday. And the most importantly, this is pip cost. For pip cost we have a formula like this, a big formula, and this formula will come to you automatically. And for pip cost you have to actually write down these values of Aussie yen, euro Aussie CAD, Aussie Swiss, and Aussie US. You just type in this green color, once you type in this green color, then it will automatically come from that Aussie US 1.7464 through a V lookup table here as 1.7464, and 20 is 2020. This is here, not 2020 cricket, but the year 2020. So this is 20. So everything will be calculated here. For example, if we are closing one of our trade, for example, we are running this trade Euro USD long on 30th of January, for example 11045. Sylvan is saying, I share Marty's sentiments about Monday trading. Yeah, great. And he says, can you email the select to us, please? Yeah. Sri says, this is updated trade journal, would you please share with us? Yeah, we are free, we are absolutely delighted to share this with you. Lest we forget, please drop an email. I'm writing down the name Selban Sri, I'm writing down, but please drop an email to support@npfinancials.com.au to give you this. For example, all these trades which for example, if you have taken a trade here on the for example, you have taken this trade GBP CHF. GBP CHF crack and snapback. CSB means crack and snapback. Here we have taken a long trade against the trend, counter trend on crack and snapback on a 12 hourly basis. On a 12 hourly basis, on this date we have taken this trade. Our entry point was 12644, and stop loss was here, and we exited. When you exit, when you close the trade, you have to write here 127.80. so supposing we exited here, we took a stop loss 124, we made a profit of 136, we made a profit of 1.09%. previous one was a loss, and so on and so forth. So why we are exiting here, you have to write opposite, or round number, or support resistance, or time, and high low taken out, or reversal, or all buyers out, sellers out. Those of you who are very conversant with this will be knowing this. So when you fill up this, that's what Marty says. I am elaborating on exactly what Marty says. Marty, correct me if I am wrong. Marty, so Lisa is asking, Marty, what time frame do you generally trade? To note that Monday has not been generally good. Marty. Question for you. Marty says 1 hour and 4 hour. Yeah, 1 hour and 4 hour. Monday is not good for, yeah. So coming back to Monday, so this is the column. This is the column, as you can see. It is automatically Selban says yes, same here. So Marty and Selban are quite resonating. All right, so this is the column here, S column. S column is picking up the day, Monday, Friday, and so on and so forth, and the summation of this S column is here. So Monday in this journal in front of you, after so many trades for maybe last three months, so many trades, Monday has resulted in 4% for this trader, whosoever this trader is. Tuesday 6.9% average, Wednesday minus 1.2. so Monday for Marty has become Wednesday for this fellow whose journal is in front of you. So don't think that Monday for Marty will be Monday for you as well. It can be Tuesday, it can be Wednesday, it can be Thursday, it can be Friday, but that will be one day. Even if it is positive for all of the 5 days, Monday, Tuesday, Thursday, oh I forgot, Wednesday comes after Tuesday, Monday, Tuesday, Wednesday, Thursday, Friday. So one day, not like our 5 fingers, they are not height wise, they are same, like same here. Not all of the days will be same. One day will either give you negative, as Monday gives Marty negative, and Wednesday gives this trader negative, and one day, even if it is all positive, one day will be less positive, like this one, Thursday 1.2% compared to Tuesday 6.9%. so this journal, as Marty says, will tell you all of the things you want to know you are trading for so long. Marty says 7, 8, 12 years, and but we actually since we have not developed, we have not taken time. This is not rocket science. This is only a plain simple Excel worksheet which we have developed at NP Financials, but it is capable of telling you everything you want to ever know in one place. For example, your weekly analysis, for example, your weekly update on the pip cost, for example, how many percentage you got on the long side, how many percentage you got on the short side, and how many percentage you got on the cost of business, and so on and so forth. Not only that, on the profit analysis, like this, BP means book profit, B column, and BP means book profit, we have analyzed. So if it is, we are getting out at weekly support or resistance 1, why we are getting out, high low taken out, or or ABSO like this one. So if you ask the computer, tell me how many percentage we made on high low taken out, it will tell 12.1. It how many percentage we made on ABSO, or buyers out sellers out, 3.6. How many percentage we lost in reversal bar reverse trade, 4.8%. So it will tell you on how many percentage we made on divergence, 0.3. How many percentage of the time we close before we go to bed, or before Friday, sorry, before Saturday, 3%. How many percentage close above, close below, low taken out. It will tell you everything. How many percentage you have cost of business, how many percentage of the time, not time, how many percentage you got, because this is Q column. This all these are, see, this is a O column, summation of O column, in which this percentage is there in front of you. So percentage there in front of you, yeah. So how many percentage we get from round number, if we close support resistance, if we close SR, support resistance means double top double bottom, and then DSR1 means daily support resistance 1 2 3, and ABSO 200 moving average, weekly support resistance, monthly support. It will tell you everything. So I don't think anything beyond this you need to know, and that's what Marty says. He started with the trade journal, and he continued to journal, and then Monday. And then he talked about book, that reminiscence of a stock operator is such a nice book, you can read many times. I have read that book many times. And he talked about after that reasons for loss. So why, if you do this, if you do this analysis, and you see the maximum loss is 1.01% maximum loss, and the maximum win in is 4.98%, which is good. So you will come to know what is the reason for loss. Reason can be cost of business, reasons can be you took a trade, then you saw a reversal thing happening, and so on and so forth. Then he talked about candlesticks and Fibonacci, that is very important. So those of you, I know Bunkim for sure, and many Marty and others love candlestick in place of bar. So that is fine. We have in module 3, in our 3 months trader foundation course, we have module 3, unit 1 dedicated to candlesticks, and module 3 unit 2 dedicated to Fibonacci. So I think these are the things which Marty said. Marty said to combine the concept of candlestick, Fibonacci, and support resistance, and all those things. And I think I have not missed anything, did I, Marty? Just to repeat what you said. Marty says sounds good, sounds like you did. Fantastic, thank you for that, Marty. And because I was writing what you while you were saying, and then Selvan added to that emotional maturity, which was seconded by Lisha also. All right, so now any last question to this discussion, or we'll go back to the previous questions? Okay, so if not, there is no new question, so we'll go to you can post your new questions, otherwise I'll answer old questions. How to trade ASX? Same like CFD, for example. No. ASX 200 is different instrument than Aussie dollar. So that was a question asked by you. So we are having a different asset class, instruction based discussions on bonds and indices. So that is, we treat that as a different asset class, and that falls under. So we have one commodity as an asset class. We have Forex, 3 months, 6 months, 9 months, 12 months, although the 6 months is common. And then we have share trading, the third instrument. Then we have bonds and indices. So this is the fourth. And then we have specific candlestick, Fibonacci, and we have instruction based discussion 2, in which we have bar by bar, and then we have cryptocurrencies. So they are different. So that answers you that question. And then what are the other questions? ATR question I have already answered. Mm. Mm. What, any question I missed? Oh, she asked about ASX and Aussie dollar. So for example, what for to do that, he asked a question of when to see ASX, and okay, I'll delete this for the time being, and I'll maximize price. I'll do the settings price, make it one color. For example, this is Australia, mate, so we'll make it what is our national color? Who knows our national color? No one knows our national color. What is yellow? Is it? Okay, yellow, green. What you were saying? Yellow, you were saying green. And yellow, green, and so we have three national color, is it? Gold and green. I am not Aussie. Selvan says I'm not Aussie, so he says yellow and green. I think Lisa is correct, gold and green. Yeah, so we'll try to make it gold for ASX. So we made it as gold. Well, you can change this color according to RGB, or just select the color. So we selected somewhat similar to color, glittering color called gold. And then we close this window, and then we go right click here, and then go to compare to security, this one, sixth one from the top, compare to security. And then here we'll write search, we'll increase this, we'll write AUD USD. Always select the mini, so we'll select mini. And you says gold and green. Gold was ASX, and here we will make this as green. So Aussie will make green, and ASX and gold. So you can see there is not much of a similarity between these two instruments, except possibly they go up and down simultaneously. For example, this fellow went up here, this fellow went up here, and this fellow is falling down from here, falling down from here. Same, it will not possibly do one to one. For example, if you draw the vertical lines, they sometimes match them, some, because correlation is not 100%, so sometimes they will not match, but the intensity, but there is a mismatch here, not match much actually. This actually went off here, and this also went off. Yeah, so there is a tendency of ASX and Aussie dollar moving in sync. If that is your question regarding AUD and ASX, Sri, did I answer your question? So this correlation is good and bad. Sometimes they will work, maybe 50% of the time they will not work. But I remember telling you the correlation between all the indices, which is almost 100% here. So for example, so Sri is saying, when I'm trading Australian dollar, is it necessary to look for ASX 200 chart? No, that is not required. If that is your question, that is not required. If you are trading ASX, then you may see other instrument, but if you are trading Australian dollar itself, then it is not mandatory to see ASX. So this is Aussie dollar in front of you. So this is Aussie dollar, and let's see around that time what happened to Aussie dollar, Euro dollar, everything. Yeah, let's see quickly. So this is Aussie dollar in front of you. Around March, February, or that time. What you have seen, what you have not seen, let's discuss. So there was a humongous gap in front of you, as you can see, for Aussie dollar around December. Maybe because this is 24 hours, that's why. So Sri says, so it is not must what indices for CFD forex trading, is it correct? Yeah, there is not, that's not a must. But having said that, if you have an idea of all the asset classes, for example, forex, commodity, and bonds and shares and all those, if you have an understanding of all the instruments, all the asset classes, commodity, shares, forex, bonds and indices, you know where the smart money is going. Once you know this, when the smart money is moving either from commodity to share or from share to indices to forex, then it will be better off, you'll be better off. So in our job, what we'll do, same thing we'll do here. We'll draw a top to top, that is swing high to swing low to swing low, and then possibly wait for our signal to be generated here, turning point, a low line chart turning point, sample setup, or sample setup 2TP, and so on and so forth. A histogram will come, but before the histogram comes, we'll have this close below, we'll have this line already in place, close below, this fellow close below, this fellow close below, but this is only a few pips. For example, from this is only 6 pips. We generally take 10 pips to minimum for daily charts. This is only 6 pips, so will not be trigger on this, but again close below, so we'll put a 10 pips below this or 10 pips below this, then we'll be in here, and then we can do the same analysis here. We can join peak to peak, if the peaks are broken, we'll join this one first, then we'll correct this one. If the peaks are broken, then our short trade will be closed and we'll be placing a long trade, but for the time being it is going this way, so we'll join this to this. I'm showing bar by bar, and the concept of PTUD, and then we do this. Now the peaks are reversed, so we are continuing to make money in this trade in front of us. This is a very important concept of, whenever you see a big bar like this, then immediately the candles will not, or the price will not go this way. No, it will not go this way. So whenever you see a big bar like that, if you see this, a big bar like this, then you have to hold on to your breath to either do a time analysis on the Fibonacci time. Those of you who have gone through our Fibonacci concepts here, Fibonacci trading, we have talked a lot about Fibonacci time. So if you allow your Fibonacci time, that is best way. Other way is you can go short again by joining these T's like this. You have joined these T's and so on. Last you cannot join this to this because this is lower. When you are joining T's to T's, it has to be higher. So we join this. So supposing we have gone short here, we have gone short here, we'll again place a short order here. This is called scaling in when this low is taken out. So we'll go short there, and our P's are yeah. So now what we will do, we'll correct this trend line. We'll take it to this new one, and we'll take this to the new one. Yeah, so don't delete, just correct it, and then we are still in the trade. Because nothing has happened. Again there we see a P here, then we'll be correcting this trade here. We'll correct this trade here. we'll sorry Whenever it is a plus sign, then only you can do. Don't do when it is a hand signal. Don't do that. When it is plus, then only you can move this. Okay, we have corrected this. Remember, we have gone short here. Yeah, and we have actually did a scaling in here. So we have one position, two positions running, and then peak going down, so this peak is lower than this. Then we can move that trend line. We are still in the trade. I am showing you the technical concept of handling your emotions. This is the only way I know to hang on to your trade. So we are running a trade from here in Aussie dollar. Initially I show you ASX, but now I am showing Aussie dollar. And we have, if we are long from here, we 1 2 3 we go up, place a stop loss here 94 pips. We are running 198 pips on that trade, and on this trade we are running a profit of 139. So both of them are 2% 1% trades, but we are again going down. So good. The P has, there is a new P has come. So what we do, we change this, make it a plus sign, change this, make it a plus sign, change this. Are you understanding what I am doing? Yes, no? Marty says absolutely. Bangim says yes. Very good. I'm just changing the P's and the T's. Sukhdeep says yes. Yeah. So I'm showing how to hang on to a trade. Yeah, and add on to your positions. Yeah. So if we see a T going up, if a T is going up, then we'll place a trade here. If the T's are going down, that means it is tremendous trend, because the peaks and tops are going down. Peaks and drops going down. Famous Rango, but my goodness, what is this? Okay, and then we must not join when the T's are going down. So we are hanging on to the trade. This T is actually going up. So what we'll do, we'll draw a trade. If this line is broken, we'll go to the downside. Yeah, this is this is going to go down. Possibly we take a third trade here. Everyone understood why we took three trades here, and we are still hanging on from this trade? Everyone is clear? Bankim says yes. Sri says, what is plus sign? There is no plus sign, my dear. That is T, small t. T for swing low, P for swing high. P for swing high, T for not for drop, but for okay. So yeah, everyone understood. We are going short here, third short, and then we good, very good. Okay, this is why I'm showing you is market did, and market is doing, and market will do this type of movement, every now and then market will do. I'm only trying to make you aware of how to hang on to your trade if it is a volatile market. If it is a good period, like oil did a 30% jump, in one single day. I will show you that. And every now and then we'll have a market, one market. I'm changing the color. Okay. Some market will actually will do this type of Selvan says this is very helpful. Thank you, Selvan. I thought I'm only person who is talking. No. If I talk, I learn. Okay. So this is we have placed a third trade, and what I am telling that once in a quarter you will get this market, whether it is Aussie dollar or ASX or rough rice or cochlear or any one of these or bund, any one of these out of these five asset classes. That's why we strongly recommend to all of you to go through all the asset classes because they are different. And then one asset class will give one instrument in a quarter which will have this havoc trades. Like this I call havoc trade, yeah, because we are hanging on to the trade because nothing has happened. So let's go one other P here. So what we'll do, we go here and change this P to this point and bring the only last two, yeah, remember only last two, yeah. So we are joining the last two peaks and we are not joining the drops which are going down, only the one which are going up, like this one going up, like this one went up, yeah, only the drops which are going up and only the peaks which are going down. So why drops going up? Because that's a retracement. This is a retracement. And why peaks going down? Because that is the trend, lower high, lower low. And then you are excited, and then we saw a new P, and then we draw this new line. We cannot join this to this. We cannot join because this peak to this peak is big, is higher. So we'll do this. Higher to lower, and then we wait for this close above a high taken out. So till we are surviving, this is close above, we are still surviving because the high is not taken out, because the high is not taken out. Or you can do, if you are said enough is enough, I'll close the trade here. When the close is above and high taken out, you can actually close the trade here. And remember, we have taken the trade there. So let's calculate. We have taken the trade here when the low taken out. So while we are closing the trade when the high was taken out, 357 pips. For this trade it generated 302 pips. For this trade it generated 138 pips. In 3 trades in 1 month, or from this to this 2 months, one trade, one instrument class. Remember, we trade 8 asset class, 8 instrument in Forex, 8 in commodity, 8 in shares, 8 in indices, and so on and so forth, 8 in cryptocurrencies, yeah. So so we have 5 instrument, we have 5 asset class, 40 instrument, and I am only displaying one instrument generating 700 pips in 2 months. Is there any question? Please type in your questions. Sri says, I sent 3 questions on emails. If you please check, they are very simple and looking for validation only. Can you please type in copy paste here, please, Sri, if you don't mind. Then I can go through that questions. Otherwise, we'll answer to that questions in your email. So yeah, so let's conclude this, and then we see this. Now we are seeing peaks are going up for the first time after 2 months. We saw the peaks are going up, started going up. This is not enough. We need to see the drops also going up. It has not the case. So the peak, that's what I told. Even if only the peaks are going up, we should not jump into a long trade. Never, never, never. We must see a trough going up. Unless and until we see peaks and troughs both. Peak means swing high, and trough means swing low. So unless and until we see peaks and troughs are going up, we will not jump into a trade. So we are not into a long trade. If we are in a long trade, we will be suffering here. Okay, so we do not We do not do this, we do not do this, we do not do this. And then we need to see the drops are going. See this? How good is this? And then drops are, yeah, drops have started going up from this point. So then we count when the drops are going up, when the drops are going up like this, when the drops are going up and the peaks are going up like this, peaks are going up, then we may consider going long. But till this point, from that point will not go short. So as a result, if we go to our questions on Sri, what is asking on the 12 hourly, I think from this point to this point, 1180 pips multiplied by 3 trades we have taken. If we have managed to hang on to this, but it is difficult to hang on to this trade here. I don't know, you may, I don't know your comment on this. Could you handle this trade to up to this point, or do you again re-enter at this point? What did you do? 12th of March, let's see, 57, and we are here. Okay, so let's see on 12th of March on 12 hourly what we did around 9th of March, when again market collapsed after we get out. Yeah, so this is one way to look into the market, P's and T's and U and D. That's why I have I generally ask all of you to do these exercises. Unless and until you do all these practice tasks, you will not be eligible to move forward, and I'll stop you from moving forward because you are not doing the self-assessment tasks. So what we'll do, we'll delete this channel, and then we have understood all these things, so we'll delete this. So we have got some 700 pips up to this point, and then we'll go to 12 hourly, our trading models, and see what happens on the 7th of March. After that 7th of March, what happens? For Aussie dollar, this is our 12 hourly models. Those of you who have already done it will know this, but just to maximize the price so that you 9th of March, yeah, this is the one. So we got out on that daily trade here around this point, and we get in again here on a sample setup. This is a sample setup according to a rule. Everything matches, core matches, and reward to risk matches. So we went into a sample setup here on this point, and then on this close, we don't wait for the low to be taken out on a 12 hourly strategy. This is 12 hourly, as you can see at the top, 12 hourly strategy. So when we enter here at this point, our stop loss would be 151 pips, 151 pips. Then we hang on. Let's do one by one, bar by bar. So we went short here on the close with a trade of 129 pips, and then next day profit, little bit profit, and here is a question whether this is if you are running short from here with a profit of risk of 150 129.39, and you are running a profit of 186, what would you do here? I question to you, those of you who have gone through the 12 hourly. 12 hourly is our favorite strategy, which discuss in our 9 months course after the daily. So in the first 3 months we have foundation, then 3 months we have the daily and the 2-day model, and then next 3 months is 12 hourly, and the last 3 months in Forex is 4 hourly. What would you do here at this point? In the meantime, let me check Sri Utagi's question. Selvan says nothing. Anyone? Selvan, why did you say nothing? Sri says stay in the trade. Selvan says waiting for more pips. Correct. Have no reason to exit the trade. That's correct. So there is no reason to exit the trade. We hang on to the trade. We want to see whether there is a crack and snap back or a close below low taken out, and so hang on. Yeah, beautiful. So same thing. What happened on weekly? What happened on weekly R1? Sorry, monthly. What happened on monthly S1? What happened on monthly S1? Same thing happened on monthly S2. So we hang on because nothing has happened to get out the trade, and we are hanging on. We are hanging because this high was not taken out. This high was not taken. We are hanging on. This type of trades actually comes. This is nothing but the continuation of this, which was from 10th of March. Yeah, exactly on 10th of. How beautiful is this one? Just after this humongous bad bar, because it's a outside bar, means nothing. Just after that bar, everyone would thought that will go long because this is a type of pin bar or a hammer, but the professionals will wait to see what is happening after this bar, because the open and close is below this line, price line what we discussed, and then open and close below the price line, open and close is below the price line. So we are hanging on, and then hanging on. So this close is happening above below the Bollinger Band. If you see, this is a Bollinger Band. So if I have to, yeah, so that's a Bollinger Band. Close is below the Bollinger Band, close is below the Bollinger Band. All of a sudden the open and close is above the Bollinger Band. After this open and close below the Bollinger Band and open and close below the Bollinger Band, we saw open and close above the Bollinger Band. So that's a possible crack and snap back. And then what we can do is, if you are believing on the crack and snap back and you have got good success in your journal, you place ATR multiplied by 3, maybe 30 pips from here, 62.20 will be out. Nothing happened. We are in the trade. We are in the trade. We are in the, see, not all crack and snap back are successful because the high is not taken out. See, you are still in the trade, and here we may say this is enough, we are beyond S3, and this is a 12 hourly system. And then at this point we saw a hammer, and then if this high is taken out, we'll be out. So let's see how many pips we got here. So on this, from this close, we got a 129 pips, 140 pips stop loss, with a profit of 742 pips. So that's a 4% trade. Yeah. So Sri is asking question about question number 1. Histogram turning point for daily system. For long, overbought red line must be crossed. For short, oversold line must be crossed. Okay, these are big questions. I have to show you, otherwise you will not understand. So what is where did you go? This one. Yeah. So histogram turning point for daily system. For long, OB, overbought line must be crossed. Turning point. For short, no. Turning point has nothing to do with overbought and overshot, my dear friend. So Sri, why did you write this question? This is
So just to understand the turning point at the histogram, there is the overbought line, for the long. Does it need to cross,
no,
or it has to just touch?
No. Oh, okay, for turning point. Oh, okay, I understand what you are saying. Okay, sorry. Now let's go to, this will actually depend on how we have given your setup. For example, Sri Utag is asking this question. Sri is asking for a turning point, whether this histogram has to on a daily, whether for a turning point this histogram has to touch the blue line or cross it, right? That's your question, correct?
That's correct. That's correct.
Okay.
For
So
I mean, somewhere I remembered in my notes for 12-hour system, it has to just touch,
correct. For a
right? But
daily, it has
for the
to
daily, it has
cross.
to cross.
It has to cross. That's correct. So that's the first question answered.
Yeah.
So I'll go to your second question. First question you were right. Second, but for 12-hour long line must be yeah, that's correct. That's this
No,
correct.
no. On 12-hour laser, if it is crosses, so what does it mean?
Okay, let's go
Yeah,
to
it
12.
touch.
Hold on. Let me go to 12-hour.
Yeah.
So what I'll do, this is our daily system. So then we'll go to 12-hour.
Yeah.
This is our 12-hourly setups. And if I increase, what are you saying?
So if it touch on a 12-hourly, that is turning point. Yeah.
That's correct. Turning by.
Okay. If it crosses.
It will never cross.
Oh, okay. Okay.
See,
Okay.
see,
It
not
will
a,
never cross.
never
Is it?
cross. We have programmed such a way it will never cross.
Okay.
Okay.
Okay. Okay. I will just, if it crosses, then I will.
Let me know. It will never cross.
Yeah. Okay.
Did
Beautiful.
I answer all your the second first question?
First question is good, sir.
Yeah. Second question.
Let's go to second
Daily
question.
system high probability setups. 2 TP, 1 TP on chart and 1 TP on histogram. This is no scoring of. This is correct.
Okay. Yeah.
Second, 2 RD, 1 relative divergence on chart, 1 relative divergence on line chart, no score. Yeah, that's correct.
Yeah. Okay.
You're testing me or what?
No, sir. Just no. I'm not testing. I'm just trying to validate my understanding.
Okay. 2 OB, 1 overbought on chart and 1 overbought on histogram. Means what? Chart and histogram are the same, isn't it?
No. Chart is on the what do you call the
Okay,
Bollinger.
okay. Yeah, you are correct. One on the Bollinger Band. So if I have to show you Bollinger Band, one on the Bollinger Band oversold or overbought, like it is closing below the Bollinger Band, and one on this line, black line. Yeah.
Yeah.
So black line is over. So if you can actually do this, you can do the color zone and go to do this BFFD, which is build finance from Forex and divergence, and do OBS. For example, if you do OB oversold, yeah, you can do this, and again do this BFFD divergence line, and then you see overbought. Take this out. So whenever this is red color here, the line below going below this blue line, black line going below, that's oversold condition, and the black line going above the red line is overbought.
Oh, okay.
Yeah,
Okay.
that's correct. 2 OB is
Beautiful.
correct. Similarly, 2 OS is 1 oversold on the chart and 1 oversold on the histogram. That's correct.
Okay. Good.
So
Sir,
everything
question
is
number
correct.
good.
Yeah.
Yeah.
Question number 3. Could you please explain the meaning of the following histogram parameters for daily system? No. This is S, LS, IC, TP, PTC. No. Yeah, you can do that, but don't break your head on this, because
Okay.
yeah, you don't because everything you are seeing here is actually being reflected. Some are hidden, some are not hidden, and is
Okay.
being reflected by this histogram. Some, yeah, you are right. TP is turning point. You are right, and this is close, something to do with close. This is something to do with open and close. This is to do with the change, and D is divergence, correct. OB is overbought, correct. OS is oversold, correct. And yeah, so yeah, your understanding is correct. And next,
Okay. Very good.
any
I
other
got one more. There is one more previous email, sir. It's on 12 hourly, I believe. Yeah.
12 hourly?
Yeah. If you could go back to the previous email, please.
Okay. So monthly questions, is that monthly questions?
Yeah, it's monthly questions.
Dated? What date?
Yesterday. Yeah.
12 hour, I got it.
Yeah.
So this is the one. because
The
I
same
cannot
question.
show, because I cannot show all your emails to me. You could have sent me a
Yeah.
private email, isn't it? Okay.
All right. Okay. No problem. It's the same. I think it's the same questions on the 12
Okay.
hour.
Could you please tell me, explain the meaning of the following histogram parameters? Again, same thing. You
Yeah.
don't have to break your head on the histogram parameters. Only thing when you need to remember is which one is a overbought, which one is oversold, and which one is a divergence. These things are correct. And then what is a turning point? This is correct. And the other things are nothing but based on the concept of, let me explain you so that you will understand.
Yeah.
These histograms, if I have to maximize this, these histograms look like, my scary. Okay, these histograms are nothing but the actual the summation of whether the buyers are in control, whether the buyers are eager, whether the buyers are committed. Yeah, I think these are the three things which we are looking here from the buying side: their commitment, their control, and their eagerness and willingness. Yeah, four things. Four things we are looking. You can write down the English. One is the willingness, one is the commitment, and one is the eagerness.
Yeah.
Willing, commit, eager, and what did I say? Control. So if the buyers are winning on commitment, eagerness, control, and willing, then it will be
Yeah.
a full blue histogram.
Okay. Okay.
If
Okay.
not, then it will be a mix. Mix means buyers may be willing, but they are not committed. Buyers may be eager, but they are not controlling the market. Yeah.
Okay. Very good. Very
Yeah.
good.
Fantastic. Any other question?
No, sir. Thank you.
All right. So any other question from anyone else? Because we are about to wind up this session. Okay, last 5 minutes is yours. You write questions. If I have experience, I'll tell you the answer. Selvan says, always remember this is a fight between the bulls and bears. 100% correct. Marty says, will Fibonacci extensions tell us when COVID will finish? Marty has asked an interesting question. Let's ask Mr. Fibonacci. Let's ask Mr. Fibonacci. That's an interesting question. Marty is asking, will Fibonacci extension will tell us when this COVID is going to. Okay, let's go to our own Australian cash. I would go to DAX or Wall Street, anything you can go. You can possibly go to ASX because we are more knowledgeable on ASX. I'll delete these lines. Lines everywhere, see. Okay, let's make this weekly maybe. Oh my god, I do look at this, my goodness. Okay, so we are here at 5101 and Marty has asked a question: will Fibonacci extension tell us when COVID will finish? And then lol. Yeah, but that's a valid question. So when we are here at 5101, we'll go to the previous swing high, this is the one, and to the previous swing low, this is the one, and then we'll do the extension. Yeah, so possibly you cannot see the Fibonacci. Yeah, these are the Fibonacci numbers, and then we go to the chart itself, make it green so that it is good for black, and then we go to the Fibonacci extensions and we take this out 38. These are all retracement, as you know. We're taking this out. This is extension 127, this is the extension 161, this is the extension 200, and this is 333 extension. Even 200 we can take out, let it be. Okay, so question here is when the COVID is going to end. Probably Lisa knows most of it because she is in medical science. and she is working in plasma, and my goodness, I don't understand even. Okay, I can't spell. All right, so this is 100%, this is 127%, this is 161%. So if there is what we are seeing here from the Fibonacci extension perspective, that there is a close below 127% extension. I have drawn the Fibonacci from here, 24th of December and to 17th of February. So we are having a close below the support line. That's below exactly stopped. This is the beauty of Fibonacci. This bar exactly stopped at 127. Unbelievable, unbelievable. Yeah, so this bar exactly stopped at 127. That's why Marty is asked this question. And then this bar closed below as if that is going to be a crack and snapback or continuation to 161. We don't know. Next week what happened is this is a crack and snapback, just close above, just close above the, it tried to close above 100%, it could not, just close above the 127.2. so this is a crack and snapback, and we wait for this high to be taken out for going long. For we'll go to ATR, and roughly speaking, if I'm not going to the ATR, I'm lazy, then possibly I'll say if it is going 50 pips up from here, because this is a weekly chart and a volatile chart, 50 pips up, then I'll be possibly looking into opportunities, and this is 45.8. so we are not in the uptrend. Yeah, so again it is closing below and we are here. Tomorrow market will open somewhere here. So yes, Fibonacci of course can help us to understand where we are, and if we draw the small Fibonacci's like if we draw the Fibonacci from here to here and do the extension, that you also can do. Take this out. That's a very small Fibonacci, just I am challenging myself to see what is happening. That's a 333 point and this and 4. What is the next number? 423 or 426? I forgot. Anyone remembering for extension 426 or 4? Let's see 426. That's a very small Fibonacci, as I told you. So it has extended everything. So we'll delete that Fibonacci because it is not meaningful. What I'm trying to do is a Fibonacci confluence. So we are here and we have drawn the Fibonacci from here. You can also do Fibonacci extension from here. Supposing you are making this Fibonacci extension from here to see a confluence. So supposing we are doing a confluence, we take this out. And then we go to, so that's a confluence not yet happened. Yeah, so there is not much of a confluence happening here. So I would say yes, if possible it is coming to 161.8 and then reversing, then that will be a possible end of the COVID, because there is a confluence of Fibonacci. I heard Australian scientists are actually like Lisha are discovering this medicine, and then possibly it will come 1 year time and then it will be all good here. Yes, Fibonacci, answer to that question is yes, it can help. Next question, double tops and double bottoms now, any instrument at this stage. Okay, Sukhdeep is asking example of double top and double bottom, any instrument. So I'll go quickly. So what I'll do go to a smaller template so charts are loading properly. Small. So he's asking about double tops and double bottoms on any chart. For example, we'll go Aussie USD. What time frame you want to see, Sukhdeep? Is it monthly, weekly, or daily? What time frame you want to see? We do daily. Okay, daily. Double top, Aussie dollar, there is nothing. Euro, nothing, not yet. Double bottom will happen here, but that's a good question. Thank you, Sukhdeep. and nothing here. GBP USD, USD JPY, nothing there. This GBP Euro AUD is in the middle, so no question of double top double bottom. Double bottom was here at this point. Euro CAD, we went short, looking into this a head and shoulder. So this is a head and shoulder, this is head, shoulder, and this is the neckline, not broken yet. GBP AUD, this is a double top, but this close below this, sorry, my mistake, not that one. Actually I can move. Close below this, close below this, and low taken out has to happen, which has not yet happened. So that's an example, current example of a double top. This top is higher than this one. GBP AUD, then GBP CHF, nothing. Dollar index, nothing. Gold, nothing. Then cryptocurrencies, Bitcoin, nothing. ASX, nothing. DAX, nothing. Dow Jones, nothing. S&P 500, nothing. Oil, we had a double bottom, that's why we jumped 30%. That's a B class double or a higher low, not exactly a double bottom but a higher low. And then in this is the start of a possible uptrend, because it has not broken one. If this is the low, then this will be it can break one and it can break two. So oil is a good example. This is Bund, nothing. This is a high grade copper, nothing. Natural gas, we had a double bottom here as we speak. So this is a double bottom on natural gas. So if this bar is closing above this and high taken out, we will be long and will be given a trade call on this. Trade calls are given on only on this trader foundation course, because people tend to forget that. So I'll give a trade call on natural gas day after tomorrow if this double bottom is hanging on. Sukhdeep, are you understanding this double bottom? Because this is your question, I'm spending time. Sukhdeep, yes. Rough rice, let's see. Yeah, crisis on rough rice. Rice is not available in Safeway, Coles, so rice price is going up. Double bottom on soybean, sugar, possibly I'll give you a call if this closes above and high taken out. So double bottom here in this example. So good question, Sukhdeep. Orange juice, double top, not really, because it is lower, so no top there. Live cattle, possibly yes, double top, but we need to see whether this bar is going down. If it is going down, then it is not a double bottom. If it is going up and closing above this, then only it is a double bottom. Cochlear, there was a double bottom few days back. Cochlear, I don't know, Lisa, whether you bought this or not. Apple, nothing. Amazon, nothing. Google, nothing. Facebook, nothing. Tesla, nothing. That's a question. That's the end of our session. Thank you so very much for your wonderful participation. I think we will have a Facebook, not Facebook, but WhatsApp group. And then I thank you so much for your participation. Very nice. Enjoyed. Monkey says, Sam says, thanks. Stuart says, very good session. Thanks, Part. Alicia says, thank you. Thank you all. She says, brilliant session. Thank you so much. Thank you all and have a wonderful evening. Bye.